Hello everybody, this is Andrew Masters from FIBO Group and welcome to my weekly Forex report. Monday should be interesting with the release of the IFO Business Climate Index from Germany as well as the PMI Index from the US. The index from Germany has been falling in the last 12 months, so traders will be hoping that the new stimulus package from the ECB will help kickstart the German economy and put some more confidence back into business spending. The PMI index from the US shows the confidence of businesses in America from the service sector, and the number has remained above zero for the past year, which shows that American businesses are on the rebound, which is good for the overall American economy. On Tuesday, we'll see the latest GDP numbers from the UK, as well as durable goods report from the US. GDP in the UK has remained flat for the past 2 years, sitting at around 0.7%, and we believe the release of this news will play an important factor in the direction of the British pound. The durable goods order from the US from the last month came in at minus 0.7% against expectations of a 1.2% rise, which was surprising given that most Americans agree the economy is on the road to recovery. Investors will be hoping for a better number this time round to help the US dollar continue its recent strength. On Wednesday, during the ASIN session, the latest CPI numbers from Australia will hit the market with the focus on interest rates. The figure has been falling sharply in the last 12 months, putting pressure on the RBA to cut rates to breathe some life into the economy, and a disappointing result may put further pressure on the central bank to act. Later in the day, we'll see the latest interest rate decision from the US Federal Reserve, followed by the accompanying monetary statement. All agree that rates will remain on hold this time round, but the following speech will be closely monitored for signs of a rate hike, as some analysts believe the first rate hike will begin in April. Depending on the tone of the bank's speech, we may see extreme volatility in the US dollar. On Thursday, the focus will be on Europe, as the market awaits the latest unemployment figures and CPI numbers from Germany. The jobless rate in Germany has been one of the more positive performers of the Eurozone, falling slightly from 6.7% a year ago to 6.5% at last month's reading. A continuation of this trend may give the euro a much-needed boost. The CPI figure, on the other hand, has fallen from 1% 12 months ago to 0.2% in the latest reading, which clearly shows the German economy is not in good shape. On Friday, the focus will again be on Europe as the latest CPI numbers from the Eurozone hit the market. Traders will be hoping for a better number than the expected minus 0.2% to head off fears that the Eurozone is headed for a deflationary period. Later, during the American session, we'll see the latest GDP numbers from the US, which have been powering ahead in the last 12 months, coming in at 5% recently and clearly showing the US economy is on the road to recovery. Holders of long US dollar positions would love to see this trend continue as we head into the weekend, so we finish off on a high note. That's all from me at FIBO Group, and I'll see you all next week.